You're about to watch the media lie through their teeth like their life depends on it. That's because Roaring Kitty just came back and GameStop broke the internet. And then this morning it broke the stock market. And it turns out that GameStop investors are everywhere. So I'm gonna catch you up on everything they've been hiding from you for 3 years that we dug up. First and foremost, we learned that all mainstream media is just the propaganda arm of the big money trying to short this company. Just a small collection of articles regurgitating that you need to forget GameStop. Surprise! And today the lies have already started. They are trying to smear Keith Gill as though he drove the meme stock mania. We'll talk about this whole meme stock word in a second. But first, let's remember, no, he didn't drive anything. Short sellers drove the meme stock mania of 2021 by borrowing and short selling more than double the number of shares that even exist all at the same time. Most short squeezes happen between 10 and 20% short interest, meaning 20% of all the shares that exist have been borrowed and short sold. Well, we're at 27% short interest on GameStop right now today, and that's after they've learned to hide all their giant short positions. This is just everyone that didn't get the memo that you're not supposed to report that shit correctly anymore. Allegedly, obviously. Because back in 2021, they had 226% short interest going into that squeeze. And then in the official SEC report, they showed that short sellers never really bought the stock. Red bars show short sellers buying. No, what they actually did is they committed crime in front of all of us, turned off the buy button, shuffled a bunch of things around, never bought back in because they couldn't have afforded to cover those positions. We're talking at least hundreds of billions of dollars worth of losses, had that all played out according to actual market mechanics. And then they colluded behind the scenes about turning off payment for order flow brokers like Robinhood, allegedly. But now let's talk about this term meme stocks, right? You know, the word they invented to describe all these stocks that act really weird, obviously all because of you buying because of social media. You and your $20 totally moves markets. And then they use that term meme stock to sort of precondition your mind when they're reporting on it to think of them as some special type of stock. And then they lie to you by telling you things like have been in a persistent and largely uninterrupted decline. Yeah, persistent and largely uninterrupted, except for that day and that day and that day and that day. See, what this term meme stock refers to is a basket of highly manipulated stocks that are all tied together through very complex financial things behind the scenes that for a long time the GameStop community was only speculating about until out of nowhere one day, this firm called Archegos, run by Bill Hwang, just blew the fuck up. Basically imploded overnight on billions and billions of dollars worth of trades. And when we started to analyze why he blew up, it's because he was trading all kinds of meme stocks and other investments in swap baskets back and forth, using all these super complex derivatives to hide the value of his true positions. So the counterparties he was trading with didn't know how much risk he had open, and the SEC didn't know what the hell was going on. And you got to remember, markets take, like, these trades take a long time to move. Like, a lot of these things are 1-year contracts, multi-year contracts. And so, you know, the GameStop play was never gonna be short. And when Bill Hwang blew up, it took a whole year before his counterparty, Credit Suisse, had to pay the bill. And they couldn't. So Credit Suisse blew up. They are no more. UBS was forced to take on Credit Suisse. I don't think they wanted to. Now UBS needs a bailout. This is from what? April of 2024? Yeah. Keep UBS in your prayers. They're going to need it. And they don't just hide these things with swaps. They also short ETFs and do all sorts of shady ETF stuff. Like ETFs are where you put a basket of stocks into a fund and then you can buy a piece of the fund. And somehow this one is the one that contains a lot of GameStop shares. It just happens to be at like 600% short interest back in 2021. Probably just a coincidence. All the while, for like the last 3 years, you can see how many retail investors are buying and selling any given stock on a platform like Fidelity because they publish those numbers. This is 1 day per bar. Green is the percent that are buying and red is the percent that are selling of regular people like you and me. This is just an average month over the last 3 years. July, it's like 80% buying every single day. But during this time, the stock price went down from what? $210 or so down to $160 or so. Because, you know, when everyone's buying, that's when stock prices go down. Except if meme stocks were being crazy because of our trades making the market fluctuate like crazy, then when we're all buying, wouldn't that make the price go up? I mean, it's almost like there are some actors out there in the markets that have massive amounts of capital and the ability to manipulate prices through various nefarious means that can make it so that the prices of these meme stocks don't actually do what retail buying pressure implies they would do. I mean, if 2021 actually was just what it was and all the shorts covered and closed and they were all gone and it went all back to normal, why has the stock acted like a meme stock ever since? I mean, this is just my opinion and this is just speculation based on like some evidence, but I mean, probably because the shorts never closed because they couldn't afford to. And when you have a highly shorted stock manipulated by all kinds of crazy swaps and baskets and ETFs, all this crazy shit, you get all kinds of bizarre volatility that makes no rational sense if you look at it through fundamental regular market mechanics. And that's why we have this term, meme stock, to make it so you don't think too hard about why are these stocks doing this. And now you've got people like Andrew Tate YOLOing millions of dollars, although to be fair, most of us never left, because we didn't break Wall Street with all these fancy algorithms or intelligent whatever. Like, we broke Wall Street by realizing that all we need to do is buy and hold and ignore their media manipulation shillery bullshit. They have no answer to that because the shorts never closed and someday they have to. And the higher the price goes, the more they have to pay every day to keep those short sales open. Whoopsies. And to be clear, this is not me telling you to buy anything. This is not financial advice at all. This is just me educating you about the history of what's been happening in the stock market. I mean, I'm not selling my shares anyway. I'm not here to make money. I'm here to watch motherfuckers go to jail. And I know what you're thinking. You're like, Ian, that's great, but it just kind of sounds like an out there conspiracy theory. Like, people aren't actually manipulating the markets like that. That would be illegal, right? Yes, you are correct. That would be illegal.
You really got to control the market. You can't let it lift. When you get a research in motion, it's really important to use a lot of your firepower to knock that down. Now, you can't foment. That's a violation of
Ferment?
Yeah, you can't foment. You can't create yourself an impression that a stock's down. But you do it anyway because the SEC doesn't understand it. So, that's the only sense that I would say this is illegal. But a hedge fund that's not up a lot really has to do a lot.
So now you understand why